Hello, good morning and welcome to our discussion on accounting. And today we will focus our attention on one particular item that is called the equity, and we would like to understand equity with a particular focus on the power distribution companies and see what is equity and how is equity calculated. But before we get into the financial statements of a particular company, let us understand what is equity. Equity is also known as the shareholders fund, or is also known as the net worth of a company. Equity of a company can be calculated as capital plus reserves plus the accumulated profits plus accumulated profits or retained profit minus the accumulated losses. So this is the shareholders' money, which consists of the money contributed by the shareholder, profit generated by the company, or the loss incurred by the company. So equity can also be used to calculate the book value per share. Equity divided by the number of shares will give the book value per share. The book value per share shows the asset backup, because equity is also calculated as assets minus liabilities. In other words, we can define as equity as a residual claim of the shareholder, which means if the business is closed, if the assets are disposed of, the money available will be distributed among the liabilities first, and any balance available is the money for the shareholder. So therefore, book value per share or equity per share is also known as the asset backup per share, is also known as asset backup per share. So now we'll take an example to understand the equity from a balance sheet. This is a balance sheet of a power distribution company, which is a loss-making company which is operating in Orissa, one of the subsidiaries of Reliance Infrastructure. And this is the information for the year 2009. So this information has been compiled from the financial statements, that is a balance sheet of the company called Wesco. And Wesco is one of the subsidiaries of Reliance Infrastructure operating in Orissa. The other two subsidiaries of Reliance Infrastructure operating in Orissa is a Nesco and Southco. So this is a capital and reserves, some statutory reserves and capital together, and all this information is rupees in million. Loans 3,921 million. Consumers contribution is 3,470 million, and current liabilities is 5,268 million, supported by the fixed assets, current assets, and the debit balance of, that's what the balance sheet shows, the debit balance of the profit and loss account, in other words, which is the loss. Now if you want to see the equity here, it is not just the capital and reserve. So let me put this balance sheet in this format. So capital, the loss is, or let me write down this as a accumulated profits, negative profits, loans 3921, consumer contribution and current liabilities. So 9,146, all that we did is to put the loss as a negative profit on the sources side. So the fixed assets, the current assets and fixed asset as it is will appear on the asset side, and okay, so 3867 and 5279, so 94. Now if you see this on the sources side, the company is not showing the accumulated losses, but they show that on the asset side. Maybe not to explicitly show the reduction in the equity on the balance sheet. But if you see here, the accumulated profits as a negative clearly conveys that the company's equity has actually become negative. To make it more explicit, let us add them together, and you have a negative equity of the company, and the other sources: loans, consumers contribution, and current liabilities. Consumers contribution, this is a typical item which you see in a power distribution companies, that some of the assets are created based on for which the consumers contribute directly. So 5268 is the current liabilities, and they're supported by the assets, fixed assets and the current assets. The fixed assets 3867 and current asset 52. So whether a company presents the balance sheet in this format or in this form or in this form, the equity of the company is same. The equity of the company can be calculated as capital, reserves and the accumulated losses negative. Or we can also calculate the equity as a net asset, and the net asset here is the total assets, which is fixed assets plus the current assets minus the liabilities. Liabilities is consumers contribution, loans and current liabilities. So you can see that when we say assets, we are not taking the losses which are shown on the asset side. The loss which is shown on the asset side is actually a fictitious asset, and the fictitious asset is not taken into consideration while computing the net asset value of the company. So to recap, equity is a capital plus reserves. Irrespective of the way the balance sheet is prepared, equity is same in all the cases. So equity, there's plus minus minus, okay, or equity is 1165 minus, or equity is given here. So in all the cases, equity is a negative, and negative equity means the capital has been eroded by the accumulated losses of the firm. In one way, this can be called a company with a negative equity can be treated as a sick company. So to go back here, so residual claim is called the equity, and equity is a capital plus minus the profits and losses, or equity is a assets minus liabilities. Thank you very much.